Hi everybody, this is Andrew Masters and you're listening to the Market Watch Review. In today's release, we'll cover the following topics: tighter quarantine in Australia, risk appetite decreases and gold reaches new highs, the second wave of the pandemic in the United States and a decline in the stock indices, and oil reserves in the USA. We start today's review with news about the toughening quarantine measures in Australia. The order to stay at home for the next 6 weeks was first received by residents for some of the suburbs of Melbourne, and now these measures have spread to the entire city. Thus, more than 5 million people will be quarantined in Australia. The market reacted to this news quietly, indicating that a sense of calmness is hovering over the financial markets. As a result, traders need to prepare for a significant decrease in volatility. Now let's move on to gold. This week began with the unexpected optimism in the stock market in China, which of course put pressure on gold. Nevertheless, on Tuesday, the price of the precious metal once again reached new highs above the mark of $1,800 per ounce. All this indicates a decrease in interest in risk and growing concerns about the medium-term prospects of the global economy. The key bearish factor for the global economy and for stock markets remains the COVID-19 pandemic and the risk associated with a second wave of an outbreak in the US. The inability of the US government to take control of the situation to curb the spread of the virus will lead to a collapse of the stock market, which is now returning to the red zone. A negative scenario for the entire global economy will put pressure on stock indices and commodities, thereby contributing to a further increase in gold prices. 2 months ago, we heard optimistic forecasts for gold to reach the level of $1,800 per ounce. Today, we're discussing the figure of $2,000 by the end of the first quarter of 2021, which will be a new record for this asset. I draw your attention to the lack of economic news from the Eurozone and the United States, which contributed to a decrease in trading activity. At the same time, I note the upcoming publication of data from the US Department of Energy on changes in oil stockpiles and petroleum products. Only a further decrease in stock will keep oil from resuming its downward trend. Let me remind you that in the previous reporting period, a decrease in reserves of more than 7 million barrels was recorded. Buying activity remains subdued. Currently, American WTI oil is still trading around a very strong technical resistance level of $41 per barrel. A rise in oil reserves can see the price fall to around $37.50 per barrel. This is the closest strong technical support level. That's all from me. Carefully follow the news background and be prepared for all the surprises of the market.